I'm Ben Schapiro, and I am the founding partner of Questmark Partners. We're based in Baltimore, and we were founded 18 years ago. I was a lucky guy. There was a terrific gentleman named Charles Schaefer, who was one of the two people running T. Rowe Price, and back in 1966, he encouraged me to get into the investment business, and I interviewed around. I went to Robert Garrett. I liked the partners, and actually it was the only firm that would guarantee me $5,000 a year in compensation. And I was newly married, and I couldn't afford to just work on commissions. And that was a great ride because there were some terrific senior partners there. Both firms had people with high integrity. It was a great way to learn the business. So, I mean, you know, we had Truman Siemens and Meredith Boyce and Eddie Dunn and Charlie Stout, and Bob Killebrew was there just before me, and it was just a great environment. In 1974, it was not a good market environment, and the capital at Robert Garrett & Sons was getting down to about a couple $1 million, so we merged, or Alex Brown acquired us. And I went over there, and that was another excellent experience. The partners there, led by Ben Griswold, Senior, it was a phenomenal experience. And you know, I often wonder, if I'd have gone into the investment business in New York, what would my integrity be? Because these two firms were spectacular, and we always hear about people in Wall Street getting close to the edge or going over the edge. That never would have happened at Alex Brown or Robert Garrett. I was very fortunate. About 18 years ago, we were going to launch a late-stage venture capital or expansion capital fund at Alex Brown. The firm was acquired by Bankers Trust. In the summer of 1998, Bankers Trust came to me and said, "We'd like to launch this fund, but we don't want any client capital in the fund. It's just going to be the bank's capital." And that was a surprise. And my partners, and in those days, Mayo Shattuck was running the firm, said to me, "You know, Ben, that's a bad model. It's a bad idea. You got to get out of here, start it, stay in the building. We'll invest in the fund. We'll support you with telephone space, but don't take anybody from Alex Brown." In November of 1998, I did take and convince Tom Hitchner, who was co-heading the private placement department, to join, and we were lucky. We went out and we started a firm, and we raised our first fund within about 6 months, and we were off and running, investing in late-stage venture capital. So the first fund was a 1999 vintage fund. It was $222 million. We made 17 investments. It was an interesting time. It turned out to be one of the top funds in the country as measured in the Cambridge universe. We were number 7th. We had positive returns. And the last time I looked, about 95% of the funds raised in 1999 would not return capital to their investors. So we returned about 1.5 times the capital. I think it's a 12 or 13% net IRR. We were lucky. We avoided, in 2001, we didn't invest. We avoided a lot of investments in the bubble, and yet we managed to have some terrific companies in that portfolio that went public and continue to be public and successful today. One of the companies that I think would be interesting to know about is a company called Align, or Invisalign, that had invisible braces. The company was founded by 2 students at Stanford Business School. They were dating, a guy named Zia Mohammed Chisti and Kelsey Worth, who was Senator Worth's daughter. The original A investor was Joe Lacob of Kleiner Perkins, terrific investor, and Domain led the B round. And both of those firms knew us. I saw the company. I thought it looked pretty interesting. There was nothing else in the market like this, and they asked us to lead the C round. And then the company went public, I think at about 4 times what we paid, and we were in it about $4 a share. It's still a public company. It's trading at about $90 a share. I still own most of my stock. It's been a great ride.